What's happening, guys? I hope everybody had a fantastic Easter, Passover, or just regular old Sunday. Depending on what it is you do or do not celebrate, doesn't matter to me. We're all here. We're all ready to trade on Monday. So this time we are getting prepared for April 5th and the week ahead. Once again, it is a time to prepare and be familiar with charts that are working and sectors that are starting to set up and understanding where the market is as a whole. However, I've been finding most of my trades coming from pre-market action, and then the later trades in the day are coming from what I'm prepared for on scan. Whereas usually it might be something that I'm ready to trade right out of the gate from scans, and then I find other stuff throughout the day. And that's all about adapting, right? So, although I do get prepared, you probably noticed the last couple Sunday scans, I spent a little bit more time on the front side of what I'm talking about rather than the scans itself, just because it's really about just coming, getting a feel for what's happening 7 a.m., 8 a.m., 9 a.m., and developing your game plan from there. It's not always the case, but in this market, there is just so much that is happening that does not necessarily show up on scans the night before. So the benefits to scanning is staying familiar with the charts as a whole, staying familiar with what sectors might be heating up, staying familiar with how the market is holding overall or maybe is not. I actually do have a couple market-related ETFs on watch this week just because they're starting to get pretty overextended. So I think that it's pretty obvious. Market is back in squeeze mode. We busted through the 400s on the SPY, I mean, who would have thought? I guess the market always does go up as everybody has come to find out since the COVID lows. So there's no point in trying to find the top. No point in trying to always be bearish, as I talk about every single time. I just want to be perma unbiased. You come in with high conviction on particular trade setups, then you move on. And I think a great example of that was X and CLF this week, where the steel moves were pretty large, nice big breakout, but they offered a phenomenal short opportunity. That does not mean that I'm bearish. I still think that these things could potentially continue on. But there was a brief pause, a brief profit taking in those particular breakouts, which offered a major opportunity for us, which, fortunately I was able to take advantage of, mostly on X, but a little bit on CLF as well. So I think that's important. And I always try to make that point because, anytime that you short a stock, especially if it's a cult related name, something that is very heavily followed on Twitter, StockTwits, whatever the case may be, on social media. If you are anything but bullish, then you're just a bear, and that's it. But really, my style of trading is just taking advantage of pricing inefficiencies, right? So it doesn't necessarily mean that I have an overall view of okay, this stock is now bearish. That's not the point at all. I would challenge you guys to, at least make sure that is, kind of how you come at these particular names. Because if you come in with too much of a bias on any of these names, you're going to get steamrolled one way or the other. Because as you've learned, nothing matters fundamentally until it matters, right? And it may not matter for a very long time. And if it does not matter for a very long time, guess what? You don't have any money left. So keep that in mind. This week, scans, like I said, I hit them up to see if they would give away a month every month. And they said yes. So this week, Brett Johnston, you've got a free month of scans. I use scans. I use trade ideas each and every single day. I prefer scans for a couple high and low list, for particular NASDAQ stocks hitting certain highs. I like the filters and I like the opportunities. Same thing with the lows. And also there's no better OTC scanner. So comes and goes with OTCs for me. You know, I was very, very much involved in OTCs towards the end of 2020 and then January 2021. But, you know, I've kind of been a little bit hands off. I still do have probably a handful that I've been trading, but it hasn't been, you know, as much as a focus for me. And maybe it's just because I'm tired of having, you know, 70 stocks or something like that in my IRA. But it comes and goes, and there is no better scanner for OTCs. So if you are an OTC trader, you should be trying you know, there is a 14 or 7, I think it's a 7-day trial. Regardless, it's free to try, so you might as well. But then also T-shirt this week is Ghislain, Ghislain. So I probably killed that name, but you've got it, and we'll ship you out that T-shirt. You just have to email me, webmaster@investorsunderground.com, and we'll get that sorted. So the video topics that I want to talk about this week, pretty quick. I know, you know, some people are celebrating friends and family, and you probably are got a crammed day, so I'll probably fly through these. A little bit of a shortened scan to get you guys prepared for the week ahead, and you know, that's that. So the obvious trade, right? Sometimes the most obvious trade is the hardest trade, right? Everybody knows something's a short, and it doesn't go down. It keeps on, you know, staying up. It keeps on holding where it should have failed, and then you get that ultimate squeeze, right? So flip that around, and I feel like Viacom, VIAC, is that exact thing. Only, you know, on the flip side, the long side. And yeah, we all know at some point it's going to bounce, right? We all know. And we all know that it's crazy, the fact that it just pulled from $100 to, you know, literally 40 and has yet to bounce. And I think that's obvious. I think it's obvious that at some point it's going to bounce, but everybody is already convinced that it should bounce, and it will bounce, and it has to bounce. And everybody's already loaded. And they added. So guess what? What's the only way to actually have a bounce? Either 1, news; 2, some type of gap and you know, some type of event that changes things; or 3, flush everybody out, consolidate, and then go when you're not looking. And, you know, just like we talk about with stocks that are going up and up and up and up, and we say don't try to find the top, that, you know, the higher they go, the more meat is going to be available. So therefore, you don't need to get to the top, right? Same thing here. You don't need to find the bottom. You know, I've been hoping that this thing goes to 38 or 40, you know, something like that. But you can just see that every single time it tries to go, it gets sold off. And so there was a lot of blocks and positions that were taken in the $47 range, I think is the most of the volume there. But, you know, look, if it just bounced to 50, 60, 70 right away, I mean, all those people that just took the blocks, I mean, that's just free money. So I just don't think that it works that way. There's going to be this time that the amount of shares that just were completely blown out into the market, they need to be digested. And we're in that digestion phase. But I think that we're just a little bit early. And I think that the conviction of longs is too high for the where we are at within the bounce. So I do think that we still need one of those gut check moments. I use that term a lot, especially in the market and some of these China names and things like that. But I still think we need that moment where, you know, people's thesis is tested. And, you know, are you sure? Are you sure this is going to bounce? And it's going to make you double think whether or not you have the right strategy, the right position. Are you oversized? And most people, I think, are actually pretty oversized. I think that they kind of started in, they added again, or maybe they were adding on the rebound, and now they probably have too many. And so what they need to do is shake those people out of their size. And once it starts to scatter amongst many many different names or many different holders versus, a concentrated large positions in, a few, I think we'll actually have the bounce. So keep that in mind. Nothing has to do what you think. The more obvious it is, the harder it is many times. So be aware. There's a lot of big picture breakouts that are setting up semiconductors this week. I want you guys to think about paying attention to sector rotation, right? So we just had all of this money come into the NFTs, right? So we had, TCAT start, OCG, ZKIN, WKEY, YVR, HOFV, DLPN. I mean, you name it. There was just like a new one every single week, and everybody's like, "Oh, we're gonna explore it. We're gonna be, we're gonna do something." Nobody has any idea, but they just want to sound cool. They just want to get it, a little bit of the momentum and the free stock promotion, essentially. Right now, WKEY is nothing more than a stock promotion. And, at this point, it's likely just going to continue to, it's, long trek back. But they've done daily PRs for a year plus. It just became kind of a joke that every day at noon there's a PR. And so now all of a sudden they're into these NFTs and they launched this, silly website and it's ridiculous. It is a pump. It is a stock promotion and it won't end well. But they took advantage of that sector rotation. That sector rotation was everybody rotating out of, whatever the prior hot thing was and into NFTs. And so then you see a nice sector rotation into steel. Steel's been going. Semiconductors has been, breaking out. So I think that it's important to understand and see the big picture and how you can benefit from that. So when steel is breaking out, what other names could go with it? When semiconductors, there's like 20 different ones that have fantastic charts. So if you either watch a few for the breakouts or when the main ones start to pull back, you've got all these other ones that you might actually have an edge with, right? So if you're watching a couple that are kind of feel like the leaders, and then there's a couple laggers. Well, if those laggards are waiting to pull back until the main one pulls back, then you've got an edge. Maybe somebody is not watching those. You start to see the others pull, so you start to lean on the other ones, and you have an opportunity. That's what I do a lot of times when I'm trading, the NFT sector, for example. You watch TCAT, you watch how the main ones, whatever one everybody is watching, you watch that for your edge. And when the money starts to come out of that one, you have opportunity on all the others. And, a lot of times people forget about that. And I think that that's why in this market, my next point was going to be about, the patience trade is actually back. So we've talked about, being patient and being too patient. And, there's a period of time, probably about 3 or 4 months now, where, a normal trade that I would be patient all day, you end up either giving back the day, minimizing the trade, or turning a winner into a loser by being too patient, right? So it's better just to take the trade and move on. But I think that it finally matters again, not necessarily fundamentally, but I think that the all-day faders finally matter again just because there's just so many things to choose from. So what happens is we have these 20, 30% gaps on some of these names, but there's a lot of 50, 100, and 200 percenters. So nobody's looking at the 30 to 50 percenters because they're like, yeah, whatever. But there's opportunity there. And there's a lot of good stuff that people are forgetting about because they're not the one that they think they want to nail. A lot of people always look at the highest percentage gainer, the one with the most volume. And guess what? That one's the most hard to, just get a grasp on what's actually happening. And it does things that you wouldn't expect because it's got the outlier range. It has the outlier volume. So keep that in mind. And I'm going to say that again. The main name that has the most volume and the most range is always going to be harder than all of the rest, because everybody is focused on trying to figure that one out, trying to either short it or long it, anticipate it. And when those moves go in the opposite direction, they're going to be so much more pronounced, so much, bigger as far as, the propulsion and like how fast they go or how fast they flush out, because there is such a big audience. If you let everybody else try to figure those out and you focus on what people are not looking at, you're going to see a lot better success than, getting in this 50-50 type trade. We've seen a lot of 50-50 action, and I keep on bringing it up in the room. You've got these huge flyers, and then they go in this period of consolidation for 2 hours, and people are trying to figure it out. You're wasting 2 hours of your time on this attention seeker while you could be focused on here, over here, there. But no, you want to nail this one because it's the cool thing to do. So think about that, and don't try to always trade the most popular one, because that's the one that's going to give you the most headaches. Know what you own. Hashtag know what you own. I usually post that on some of these different names, and you should be familiar with situations where companies could potentially raise. I don't go through the filings. I don't spell it out, because if you want that edge, you can do that. That's how I learn. I reverse engineer everything. So you go back and look at different offerings. Look at good offerings, bad offerings. What makes the difference? Did it have terrible warrants? Was it super horrible pricing? What was it? Good pricing? Was it just a clean raise where it was just better than expected on the price? Maybe the prior close, smaller than expected, no warrants. How good or bad was it? And how badly did they need the cash? And if you're trading something on the long side that is ready to go, it's been maybe a year since they've raised any money, they have $0 left, and they need money, then you should be very careful on the long side. And so sometimes, actually a lot of times, I miss out on the potential upside, but it's not worth the risk, because I've been in the downside when I ignore those things. So you might win and win and win, and then that time that it finally catches up, all those wins are nothing. And the reason for that is because at some point, being reckless will catch up to you. So I think it's very important to know what you trade, know what you own, go through and just make sure you know what you're up against, especially if you're sizing into something in small cap land. Because if the writing's on the wall and they've been waiting to raise money, and here you are sizing in, stock's up 100%, it drops 50%. I mean, that could be a lot of money real fast. You just saw it on FTFT on Thursday. And, unfortunately, I covered 75. I was being, just like I've talked about on the videos, I'm not looking for headaches. We're coming into a long weekend. I had a great short on FTFT over 8, and I was being patient with it. I covered some into the flush, and then it started to look like it wanted to, rally. And I was like, you know what? I'm going to size down, and I'm going to, just kind of trade around my core short. And about 5 minutes after I sized down, they did a midday offering. And so I knew not to be long, but, it's frustrating to see that happen, but it is what it is. It's going to happen. But my point here is to think about all the longs. They immediately lost $1, and then they lost another $1 right away. And, if you focus on what you're up against, you're going to stay out of situations like that. Sometimes you're going to miss out, but at least you're going to be safe. And same thing with what was the other one? Is it ACY? Yeah, ACY. I was actually long. And I was long in the morning, and it shot up. It went through, 1 or 2 circuit halts, and I was like, you know what? That's enough for me. Because at some point, the volume started to churn, and each circuit halt that it does is one circuit halt closer to a potential Amex halt. regulatory halt where they say, hey, we need more information. Or they say, hey, we're going to halt it until it delists because it just filed for Chapter 11. Is that worth it to be long? No, not to me. Maybe it is to you. And yes, a lot of people made a lot of good money on that. But after a certain point, I'll trade that first move. But as the volume starts to churn, the further in the day that it goes, the higher it gets, 100 million volume-wise. Typically, it's like 200 million, 100, 200 million. I've seen them halt these things and, request more information. But for me, it's just not worth it. And so I avoided that on the long side after that initial move. I did short it towards the end of the day. There was an opportunity there. But I missed out a ton on the long side. But that's okay because it's a know what you own situation and you could make money 5 times, 10 times. And it's that one time that you're trading it and you shouldn't be there. That, you've got a bunch at $10 per share because it's going to 14. It goes into a circuit halt. You're like, a nice fist pump that, it's going into a $14 circuit halt. And all of a sudden it goes from a circuit halt to a regulatory halt, requesting more information, opens up at 5. And you're like, oh, I knew it. And that's what I'm talking about. That's why I didn't trade it long. All right. So let's get into, I think that was about what I wanted to talk about. And then I was going to talk about looking left on a couple different names that worked out extremely well. You guys sent in a couple questions as well. And I wanted to get to those. So I appreciate you guys answering the Twitter questions that I send out. I'll do those and then we'll get into a couple technical thoughts, ideas, recaps, and then we'll get into the scan. Sergio said, pre-market, aftermarket trading, do you think it's worth it? Liquidity traps. So I don't view those as liquidity traps after hours, or at least I use that term differently. I think pre-market trading is wonderful. I mean, it's been amazing this past, the past year, maybe 2 years. It's almost like regular hours on some names. You see a lot of trap and pretty much ranges kind of defined pre-market, and you use that information for after the market opens. So I always trade sometimes 6:30 a.m. to 7 a.m. and then I'm aware of the 7 a.m. kind of shuffle. That's when E-Trade opens as well as a bunch of others. So you get that, are we going to continue? Is it going to swipe or is it going to stay heavy? So you get more information at 7 a.m. I like to be cautious. And then 7:05, 7:10, I might make a trade. And then into 8, I want to be cautious again. Usually I leave it alone. I leave it alone unless it's got high volume and big range. But typically from 8 to 9, 9:15, I want to be hands off because that's when you start to be, or at least where I start to kind of maybe form a bias and I start to get the blinders on. And sometimes when you get those blinders on, you convince yourself that you're right. You convince yourself that, this should be pulling back. And then all of a sudden it's 9:30 a.m. You're on the wrong side. They do some type of crazy move off the open. And here you are. Even if the trade works out, you just wasted, an hour, 2 hours of your day, or maybe the full day. And you're finally back to flat. And you're like, yes, phew. Meanwhile, you just missed everything else because you had your blinders on. So I always like to be a little bit cautious with that. Next one from Maddie is my biggest issue has been letting trades play out bigger picture. And maybe I'm taking on too much size on entry and should scale in on dips. I've taken losses, small wins that should have been big wins. I'm doing this part-time with the hope that I can be full-time. Need to be consistent first. So a couple things with letting trades play out bigger picture. For sure, sizing is key. Typically, if there is a setup or something that I see, I might size into that setup for maybe the breakout and then size back down around the core. So I trade around the core a lot. So let's just say, maybe I'm swinging 2,000 or 5,000 shares and it starts to set up and it looks like a nice breakout. I might go to 10,000 shares. Breaks out, I sell 5,000. I'm back to that core starter, the core amount that I had that I was swinging. Starts to set up again. Maybe I scale back into 10,000 shares or 7,000, whatever it may be. And, you know, it either goes or it doesn't. And then I scale back down to the core. So that's one way that you could probably help with a bigger picture. I think a lot of times, you know, people add and then they add and they add again, and all of a sudden it stops doing what they thought, and they keep that size. And I think that's where a lot of people run into issues, is because now it's not about the big picture trade, it's about the emotions. And the emotions are coming in and saying, are you sure? You've got a lot of size here. I'm gonna check you. All right, you sold, thanks. And then it goes, and you were right all along. But it's because you oversized and you didn't respect the trend, and, you know, dump out the ads that you had. So I think that's probably what you're running into. And so just kind of keep in mind, you sized up because you thought X was going to happen. If X doesn't happen, size back out. Go back to that core, because then that way you're not going to be emotionally attached. Next one from Rory. Where do you set mental stops? The reason I do mental stops is because everybody's got the same stops in mind, right? So if you're putting your stop at those levels that everybody knows should be, you know, the turning point, then yeah, there's a good chance that you're going to get tested and blown out, and then you're right all along. So typically for me, I size based off those key levels that we all know, whether it's a whole number, half dollar, key breakout point, key level from before, whatever it is that you're looking at as your risk. I'm sure, you know, 99% of other people are as well. So typically I position a little bit less to give myself wiggle room around that level. That way, if it goes back and tests over and under, I can do that without emotions attached. If it starts to stay heavy, I stop. If it rebounds back up, great. You know, at least I didn't stop out at the lows. And so, you know, that is good for me, but for a lot of people, that could be bad, because that's when you build bad habits. If it stops working and you don't stop out, right? I'll just see what it does. I'll give it one more try. That's when you start to, you know, end up in a terrible situation. So make sure, if you do use mental stops, make sure you are stopping if you are wrong. So keep that in mind, but I always give myself wiggle room around those key levels that everybody knows are going to be the key levels, because that's why, you know, they always go back and retest, because they're going to blow out, you know, stops in any one direction. Dom said he's not letting winners win enough. So one of the biggest things, and same thing with me, you know, I always, you know, sometimes you overhold that winner, you were up huge, and then it comes back, and you know, sometimes you don't let something run enough. If you're having trouble letting things run, I always tell people, just leave 100 shares on. Get your mind used to having something work while you're trading other things, or whatever the case may be. And then maybe it turns into 200 shares, and then 500, and then 1,000. It just becomes more second nature for you that, yeah, I'm letting this thing work. For some people, they're in and out of a trade so fast that, you know, their brain isn't kind of prepared for a trade, you know, for anything more than, you know, a 5-minute period, right? So by just leaving a little bit on and getting used to kind of seeing the fluctuations and things like that, I think that it's going to help you let these things work. And then as it gets more second nature to you and more comfortable, then you start to leave more and more on and let things work. So I've said that to people before, and the feedback that I've received after, you know, a month or two of putting it into work has been good. So try that out and see if it helps you with letting your winners run. Would you consider that over time you develop some sort of intuition or some feeling that it gives you an extra second to make your decision before the crowd? Or is this just the myth of the trading world? Absolutely. But you have to be cautious with that as well, right? Because sometimes your intuition, your gut is wrong, you know, and you're confident that, what you saw is right, and it wasn't. It wasn't. And that happens a lot of times on these small caps, these these low floaters, where you might think that it did everything to prove to you that this thing is over and it's got to pull back from now. All of a sudden it's back to the highs, right? What do? So you better be stopping out. You better have a plan. You better be sizing down, whatever the case may be. But if you're relying on that gut and that that instinct, now you're not you're not using proper risk management, right? You're going with what you think should happen, what you've seen before, and that's when you also run into some issues. So yes, I do think that there's a lot of intel and gut instinct and all that kind of stuff. Absolutely. But what it does come down to still, no matter what, is those levels, those lines, the trend, and those key levels are crucial. And it doesn't matter what you think. The market's the market. The market's going to do what it's going to do. So yes, that helps you with entries. Yes, that helps you with kind of having that gut feel. But it's a double-edged sword when that gut feel is wrong and you have to, abide by your risk management. So the last question that came in that I picked here was, as a relatively new trader kind of struggling with information overload and how to effectively sift through it. So that's something that, I talk about every single morning. That's something that I think is crucial to kind of understanding who you are as a trader. And, I think that you have to figure out what type of setups you're best at. You can do that by paper trading. You don't need to use real money to figure out what you're good at. Figure out what you're good at over, with paper trading, then you start into real money and slowly figure it out from there. But whatever your brain processes best, keep doing it over and over and over and over and over. And that's where your focus should be. So in the morning, every morning at 8:50 a.m. when I do the broadcast, I'm going over what I'm thinking about trading, and I am focused on less than a handful of names. 2 to 3, and maybe another couple for secondary watches later. I'll set price alerts and things like that. That's it. And, all the other ones that come along throughout, that's through the day, and they hit scans, and I kind of develop plans from there. But my focus off the open is only a couple. And I think that everybody tries to nail everything. Everybody thinks that you trade everything. You know what? Trading less is more. Focus on what you're best at. I try to scale into only 2 names at once. When I try to trade too much, and I do trade a lot of different names, but I don't size into everything. I try to pick only 2 to focus on, because that means I'm taking my A+ setups and focusing on those. I don't want to let these other trades go without, participating in them, because, there's a setup there and they could be working while I'm trading the other names. But you need to focus on what you're best at. And like I say every week, my A+ setup may not be your A+ setup. And the way that you find that out is by going through the motions, whether it's through paper trading or doing real money, but find out what you do best and keep doing that. All right, guys, so the second part of scan is the regular Sunday scan, but I wanted to go over 2 looking left situations that I think could help you from trades that I took this week that I was super patient with. So the first one was SNOA. You can look left, and I'll go ahead and post my trade so you guys can see it, but you can look left at the situation. You can see that 10s were a prior key level. You can see that it's had trouble with that before. And it was likely going to have a major trouble breaking this 80 million share day. I think it is 80 or 60 million share day. So that's a good way to kind of do a quick look at the chart and see where you're looking at as far as where resistance may be. And then look intraday, and sometimes you've got that pre-market action at 4 a.m., which a lot of people get excited about. And the thing about the 4 a.m. prints is that you see it at 12, and all of a sudden you think that 10 is a good deal, right? It's just the way in which our mind works. All of a sudden, something's at a discount. Meanwhile, it's still way up, right? So we see something at 30 and all of a sudden it's at 10. So we're like, oh, wow, it should go to 15 or 18. Meanwhile, it goes down to, 8 or 5. So be cautious thinking that something is cheap versus where it was at 4 a.m. It doesn't take much money for them to run it up pre-market to convince you that a higher price is actually better when it's not. So that was one, and then TAOP was another one, and you can't actually see it on the daily chart just because it ended up pulling back pre-market, but we ran into 14 resistance pre-market. So if you go back and you look at this intraday move, you'll see that we went right into that level on the daily chart. So again, I'll post my chart here so you can see the patience trade, but I started to participate on the short side once I saw failed follow through at that 14 level. And there was zero reason. Somebody asked me, how was I so patient with TAOP? Well, there was a couple reasons. One, they put out an NFT PR. Two, they're starting to pretty much become a stock promotion. I mean, they have been all along, but they're starting to put out daily PRs as if they're like, getting together on the phone at night and like, hey, how can we make a PR tomorrow? That's the quality of PRs that are starting to come out. And I think that it's just on the tail end of the stock promotion. So I always look left. You can see how and why. You have your 100 million share day here with the peak around the 14.48 in this case, but basically 14. You see the last couple tops right here, these last 4 days, all peaked at 14. And I realize there's an outlier day, right? But sometimes they go into circuit halts. Sometimes it might just be a newsletter right off the open and it shoots up and then comes right back down. So you don't always want to, think about the fact that it could go to 17. You want to see where it closed at. You want to see where it's had trouble with in the past. Look left, and you would have gathered all the information that you needed, and you actually gathered. If I put a line at this top right here at this 14.48 level, which was the peak that day, and then you go back and you look at where we went right here. I mean, it's plus or minus a dime or two, right? So that is the most important thing. It does not mean that it's always going to top there, but it is a good starting point to watch and wait to see the confirmation. Once you see that confirmation, you know that you at least have some competition. Competition in the sense that all those people that bought on the 100 million share day, they got bagged, now have an opportunity to get out. And again, the last reason for the patience and the conviction behind that trade is that, like I've been saying, I feel like we're on the tail end of this NFT pump. So when they come out with an NFT PR, I just don't think it's going to have the legs. Same thing with, WKEY. We're on the tail end of the stock promotion. That's all it is. It's a trading vehicle, stock promotion. Every single day they put out a PR, ramps up, fades off. They will, whatever the next hot thing is, they'll try to participate in. But it worked for them. They got a liquid name. They've got volume, and, that's that. So let's get right into it. Sunday scan, PLTR. First and foremost, as I say every single week, I am not a stock advisor. I am not recommending buys or sells. These are not stock recommendations. So it's not investment advice. It's educational and informational purposes only. And if you guys notice, I go over the key levels, what I'm thinking, and the goal is that, kind of get you in the same thought process as to what makes a good trade. And if that leads to a trade for you, that's great. That means you understand. That means you see the setup. That means that you're able to figure it out on your own. And that's the goal here with what I'm doing. There's a lot of services out there that, if you want to follow the leader and be a sheep, by all means, go for it. But that's not what we do. I'll tell you that straight up. If you ever wanted to join the service to be told what to buy and sell, then, don't bother, because that's not what we're about. Anyway, PLTR, higher the better. Ideally, we get some type of gap up. I don't want to come in too biased. It could go either way, so I'm not making a call as far as, I think this is going to break out or break down. I want to be prepared for two types of trades. One would be if it starts to base over 2320s, I'd potentially take it for a long versus 23s. If it starts to peak versus 2320s and it continues to stay a little bit heavy, I would potentially fade it back down. A lot of this just depends on how the market reacts. If we gap up and we're continuing to stay hot, then these things are going to continue to go and rebound. And we've seen that PLTR can have those multi-day breakouts before. So it's been steadily heading down. It's been, consolidating for quite some time. So it very easily could continue to head higher. So I want to be aware of that. Just like we talked about with the VIAC trade, right? So say you've got this breakout and it pulls back. Everybody, it's the most obvious rebound trade. Nope, they flush everybody out. Goes through a consolidation period, works everybody out. Then you might have that next leg. That's the same kind of point that I was trying to make with that. So anyway, prepared for two moves here. I'm not super biased because the next ones that I have on watch is, TQQ and SOXL, both ETFs, both you should look up what they are related to. So for example, in TQQQ, you probably want to be watching tech. And so SOXL is not one that I typically trade, but I started to look at, the different ETFs and the opportunities, and I felt like this one had a pretty decent range as well. The reason why I have these up right now, or at least I'm interested, is because they're starting to overextend. Now, just like X, just like CLF, that does not mean that I am bearish. It means that if we gap up and we have some type of surge, I think there's going to be a profit-taking opportunity. If we gap down and we have trouble, rebounding red to green, then I think there's going to be some type of profit-taking opportunity. I want to be prepared on these two to fade when and if that happens, just because we're starting to get into some overextended action. So if we were to gap too high, over 98, back towards 100s, I think there's going to be a great trade there. But these are going to be my vehicles to trade any market, not necessarily correction. I don't want to overuse that word because people always start to think like, all right, we're going to tank now. That's not what I'm talking about. I'm just talking about any standard gap up parabolic profit taking, any weak open, failed follow through fade. And I think that, we're starting to get into that situation where we could either go into a squeeze mode and then that trade comes, or we're already here. So that's why I want to keep these two on watch, and those will be my vehicles of choice when and if that trade does come. And as you guys know, if you did not want to trade this one on the short side, you could obviously go long on SQQQ as well. So those are the opposites. UXIN, nice one on Thursday as well. This one ended up coming back quite nicely. I saw this actually on Wednesday, and I was debating, taking it overnight. And I actually think I put a few on Wednesday, but then I took them off, and then it gapped up, and I took it off radar. I ended up fading it intraday, right off this failed follow through momentum, and it faded, covered some, re-hit it, and faded, and I left it into the VWAP level. Ended up coming back. I got long for a gapper. I was thinking that we would potentially go to 220s. Ended up going to 230, 235 after hours, something like that. So I ended up trimming a good portion of it, but I still have a position long, just small. Typically you get long for a reason, right? And we've talked about this before. I got long because I thought it was going to go to 220s. It went to 220s. So rather than change my plan, rather than say, oh, well, it's 220s, let me see what could happen. No, it hit my target level in my head. All right, I think it's going to go to 220s. It's there. So why would I not trim? So I trimmed around the core, and now I'm letting the rest work. If it works, great. If it doesn't, I'm moving on. But I'm prepared for two trades. If it has a relatively weak open and starts to base around the 190 mark and starts to rally towards the 2, I want to be involved on the long side. If it gaps up and has trouble 220, 230s, then I want to be fading it. But I'd love to see this thing really do something fun, 220s, 250s, give us some type of blow-off move to have a better trade. SNOA. Failed follow through momentum. Higher the better. I always like to look left, recent moves too. So I'd love to see it kind of push back up towards 9, maybe even up towards the VWAP level, 930s in there. And then potential failed follow through momentum. It reminds me a little bit of WAFU, where, I'd be looking for that next day gap up and then fail, right? So maybe it gaps up a little bit higher and then it fades off. So we could potentially have an intraday chart that looks kind of like this, where you've got this little volume pre-market and then there's no market and it fades off. And in this case, I'd love to see it head back under 8. ACY was a fantastic opportunity. Like I said, I participated in the first move over here. It started to kind of get tight around VWAP, and I got in there and made it for a little bit of the move, but unfortunately sold too soon. I shorted it a couple times here and there. We went over it in the room, the Traders Lounge. I always try to start talking about these situations just because the moves are so pronounced, where you can actually see the stuff moves. You can see the soaking. You can see the sellers. You can see everything that you need to see if you're trying to learn tape. Everybody wants, even me to do a webinar on tape. Everybody wants to be just told, how do you read tape? How do you do this? How do you do that? The answer is always screen time. It's never, oh, you just have to do this and, that's it. It's that easy. It's never that. And it's never, 100%. You're using your intuition, your gut, your feel for what's happening to make decisions. But at the end of the day, you need an underlying plan, right? So in this case, I told everybody in the lounge, make sure you're recording. I suggest everybody records moves like this because you can watch it back. That's your screen time. That's your screen time. Moves like this, where you see the moves and they're so pronounced with so much volume, so much action, versus something that might not be as aggressive. And so if you can learn in this setting and then kind of apply it to everything else, you're going to become a better trader. And so in this case, I talked about, I compared it to eyes, and they did this, this swipe up right here. They did a breakdown and then swiped it back up. So they caught a lot of shorts, made them a little nervous, and then you started to see, ended up seeing the kill candle. And when it tried to rally again, I made the comment in the lounge, did you see the difference that time? And they walked it, they ramped back up, but that time they were prepared, and there was a bunch of offers hidden. There was no size shown, but if you compared it to how it was reacting before, where it was very jumpy, this time it just went up and it just hit a wall. And that was different. That was the first time that we had seen it. So if you had recorded that prior price action, you could go back, review that, and you'll see the difference. And that's all time-stamped in the lounge. Not as an I told you so, because that's not what this trade is. It's more about learning rather than even the trade itself. The timestamps are there because you want to go back and go through, watch the tape, watch your recording with the commentary that went along with it, and you'll see the key levels. WAFU, higher the better. I think it's going to just be one of those that kind of fades off back towards 7 or 8 the next couple days. So nothing that I would size in. It's still, it's still an interesting trade just because it's had back-to-back, 60, 70 million share days. So there is still that potential that if it starts to hold, you want to be cautious. But I do think it's going to kind of fade off people's radars and head back lower. HOFV, higher the better. Maybe it gets supported by a couple PRs here and there. But overall, I would be looking at if pops, if it were to open at 5 and run up to, 520s or something, I'd be interested in that potential fade. So I think that, it's going to be a lot like WKEY, where pops are starting to get sold every single time. We're on kind of that back end promotion at this point. They've tried to get as much out of the NFT PRs and the hype as they can, and now they're back to reality. So RMO, higher the better. I think that we could probably see this into the lower 5, 6, 7 range is very much possible. A lot of times people take these things off radar because they don't think they can go lower. Well, it's already faded so much. Well, yeah, that you could say that it's 16, and then then it's at 11, and then it's at 7, and same thing with this RMO, same deal. You can have that same conversation with yourself. So no, it has not necessarily gone too low, and so that very much could be a nice fade. And those 60, 70, 80 cent moves are great. It doesn't have to be big share size. It could be a nice fade while you're trading other things. YVR, same deal. HOFV, WKEY, all those. The chart is setting up well. I will admit that. So I would want to be cautious if it continues to hold over 420s. But as long as it holds 420 as sort of a peak, I'm thinking that we could have a nice fade back. Last Portascan is continuation. These are the setups that I'm looking at for potential breakouts. PAVM, I don't have a position. I am looking to potentially take a position as long as 480s continue to base. Great breakout setup. Nice little ABCD type setup as well. RAIL, you guys know I've been participating on the long side of this one. You can see a couple days of the wicks that we talk about. So, I participated the first day. It ran up the second day. I took it off. I rebought the dip. I had taken it off, and then I ended up getting back in there. So I am looking to potentially position for a longer term type trade. I'd love to see dips. I just want to make sure that it holds, around the six, over 620, 630 level, 650s. If it starts getting too heavy, then it's just going to be one of those where maybe this was just a run up and it's going to fade off. So I want to see it holding those mid sixes over the next consolidation period. So, I consider this sort of a $5 consolidation period. So now I want to see basically 650 start to consolidate. As long as they hold over and under and set up for the next move, then I'm interested. If it fails after the consolidation, then obviously I'm not. But nice so far. PFMT, this one I took long. I put on scan on Tuesday, Wednesday, Thursday. Yeah, Tuesday night. That I felt like that was a transitional day. We talk about that. It had 130 million volume, where you've got that breakout and then it comes back in, and it closed up, but pretty much flat on the day. And to me, shorts came in that day. Somebody was a buyer though. Somebody who came in that day and was buying a lot of size. So I put it on scan that night that I was looking to participate on dips from now on, and I think that it could go back up to the highs relatively quickly. So I'm letting that trade work. Bigger picture trade for me. I'm not worried about 10, 20 cents. I'm looking for something that could potentially set up and become a bigger trade, just like that PAVM. That's kind of how this type of situation started. You've got this big day, consolidate, big day, transitional kind of day where it gapped up, faded off, and then you had this big move. I'm not saying that it's going to 5, but I'm saying that I feel like that was the new base, and that I could easily be proven wrong. And if it starts to stay heavy, then obviously I'd move on. But I feel like this is kind of the new base for this particular setup, this move, and 180s, 190s might be that level. So we'll see what happens with that. BNTC, I am still swinging in that one as well. This was a great trade the first time I participated on this rally, and what I found particularly interesting was on Thursday. And if I said Friday at any point during this video, I meant Thursday, because obviously Friday was off. But there was a buyer in the tape over here, and then they just kind of walked, and then they came back through the day. So this is what I mean by a buyer in the tape. Whether or not this was just somebody covering, we'll find out. But to me, it appeared like somebody was sort of taking a position. And so I'd love to see this thing continue to hold. But as you guys know, it's one day at a time on these types of things. And if we get another PR, it starts to base, I'd potentially scale in. But so far so good, decent padding from that low from the rally, and so we'll see what happens. Last couple, Craig, I've been here for months, as you guys know, starting to turn up again, as well as YGMZ. I took a position towards the end of the day on Thursday and had swiped up. I just joined the trend. You can see they kind of put in a nice base at 520s. They've ramped it up to 620s. In the room, I said, hey, if you participated, it might be a good idea to lock some in just in case. But they ended up yanking the bids and pretty much consolidated around the 560 level. So I'd be cautious until you start to see volume and 550s really start to base. As you guys know, there could be a lot of one candle wonders, right? So they ramp up and just kind of fade off and do nothing. So I want to see follow through, confirmation, proof that it wants to continue higher. Otherwise, it could be that one-day wonder, and you don't want to end up holding the bag. So that's it. If you guys can, as always, leave your key takeaway. Just write the timestamp of when it happens. You guys have probably seen what we've been doing with the videos, so it doesn't go unnoticed. It's well appreciated. And if you can, as always, leave a like on the video. It helps us, helps you, helps everyone. And I hope you guys have a wonderful Easter. We'll see you on Monday, and we'll catch you in the room.